In 1944, one currency rose to dominate the world, the US dollar. For 80 years, it's been the backbone of global trade, sanctions, and American power. But in 2025, that dominance is under serious attack. President Trump has announced tariffs up to 100% on some of the world's fastest-growing economies, demanding they stop what he calls a war on the US dollar. These countries are not small. The BRICS nations Brazil, Russia, India, China, South Africa, and new members like Indonesia present over half the world's population and nearly half of global GDP. India and Brazil alone now face tariffs of up to 50% on billions of dollars worth of exports. In response, they're striking back with retaliatory tariffs, redirecting trade, and deepening ties within BRICS. The group has been working for years to reduce dependence on the dollar. Their strategy includes trading in local currencies, building new payment systems, and even discussing a shared BRICS currency. If successful, the dollar's global share, which has already fallen from over 70% 2 decades ago to about 58%, today could shrink faster. That means higher borrowing costs for Americans, weaker sanction power, and a shift in the global economy. So, how did we get here? BRICS countries are what economists call emerging economies. They've moved beyond low-income, resource-dependent systems into more diversified, globally connected markets. Each country is at a different stage. Brazil is shifting from commodities toward industry. Russia remains resource-heavy but wants diversification. India is becoming a tech and manufacturing hub. China has transformed into the world's second-largest economy. South Africa is industrialized but still faces inequality. Their growth has been dramatic. In 2009, BRICS was just 5 members. By 2025, it expanded to include Indonesia, with 9 more applicants waiting. Together, BRICS now outweighs the G7 in population and rivals it in economic power. What really accelerated their push away from the dollar was U.S. sanctions on Russia. Between 2021 and 2024, BRICS trade rose by more than $700 billion, and a growing share of that trade no longer uses U.S. dollars. In fact, by 2025, over half of China's cross-border transactions are settled in yuan, overtaking the dollar for the first time. Southeast Asia, as largest lender, even reported a sharp rise in yuan settlements in trade with Latin America and the Middle East. This trend is visible on the ground. In Brazil, American cars are disappearing, replaced by Chinese EVs from BYD, which now dominates the market with investments and deals settled in local currencies, instead of dollars. Every yuan-based transaction weakens dollar demand. This is de-dollarization in action. Meanwhile, Trump's new tariffs are raising tensions. India and Brazil, once close U.S. partners, are openly rejecting American weapons purchases and exploring alternatives within BRICS. Instead of dividing the bloc, tariffs are uniting them, pushing leaders like India as Modi and China as Xi Jinping to strengthen economic ties despite long-standing rivalries. At the recent BRICS summit in Rio, Brazil's President Lula even called on members to test a shared currency, directly challenging the dollar. Talks are also underway for oil sales in yuan and payment networks that bypass SWIFT. What does this mean for Americans? In the short term, tariffs could cost U.S. consumers and businesses up to $56 billion annually through higher prices on goods from electronics to cars. Export industries may also suffer as BRICS nations retaliate, cutting purchases of U.S. agricultural goods, tech, and aircraft. Since BRICS controls vital commodities like oil, metals, and grains, supply restrictions could directly hit us manufacturing and energy. The bigger threat is long-term. If BRICS increasingly trades in local currencies, global demand for dollars and U.S. Treasury bonds, with foreign ownership of U.S. debt already falling, this could push interest rates higher for longer, making it more expensive for the government to borrow and for consumers to get loans. At the same time, America's ability to use sanctions as a geopolitical weapon weakens when fewer countries depend on the dollar. Markets are already reacting. Bond yields have been volatile, while safe havens like gold and Bitcoin are seeing inflows every time BRICS makes headlines about currency alternatives. Other emerging economies are watching closely, deciding whether to align with the US-led system or the growing BRICS bloc. So, how should Americans think about this? For decades, dollar dominance has given the US unique advantages: cheaper imports, lower borrowing costs, and strong purchasing power abroad. It has also helped keep inflation low by exporting dollars globally. If that changes, those advantages erode. That doesn't mean the dollar collapses tomorrow, but it does mean the world is shifting. Investors may need to pay closer attention to assets that hold long-term value, from equities and real estate to commodities and even digital assets. Diversification becomes more important than ever. The rise of BRICS and the challenge to the dollar is not a story that ends in 2025. It has a trend decades in the making. and it's reshaping the foundations of the global economy. The only question now is how fast the change will come, whether the US can adapt before it is too late.